Good evening, everybody. I hope you are all having a wonderful day. Coming at you about a day late after the market has closed on Friday. Today is Saturday, January 7th, 2023. I'm just going to be running through all three of our larger time frames, the monthly, the weekly, and the daily, and then hopping into the intraday time frame, our 30 or our 30-minute market profile, break down some destinations for you guys. Go ahead and chart it out. And then I'm gonna make a separate video tomorrow on how to uh, trade a day like we had yesterday, where a market uh, ended up basically trending up. See what kind of nuances you can look for to help you trade better, and then things of that nature. There's also a checklist I want to share with you guys for anybody that does trade. I want you guys to, I'm gonna share a checklist, and then I want you guys to write it down. I'll have it on tomorrow's video, but for today, I just want to break down what happened overall and kind of give you guys a more of an update on what I'm thinking the market's trying to do. So, monthly, we are still in a multi-month balance. Just chop it around inside this balance, basically inside this channel. Um, we reviewed it several times, so not much needs to go into that. Monthly high, balance high is 4327.50, right? So 4,327.50 is our monthly balance high. Then 3502 is our monthly balance low. We're trading inside of that balance. The weekly is trading inside of that balance, right? But inside of the monthly balance, we had a weekly balance. Now, here's where things start to get subjective in how you want to look at the market, right? So this week we put the market into a balance. Uh, Zoom in here a little bit more so you guys have a clear picture on these past 3 weeks. We put the market back into a balance by taking out last week's high, right? So we included the week before that high right here at 39.1875, and then our balance low was 37.8850. Well, we tried to get near the balance low twice, never took it out. Shorts covered, long positions came into the market, and we rotated back to the top of the balance. Now this week, we took out the top of that balance. Um, I'm not going to call it up yet. I'm not going to say the weekly is trending up yet, or one time framing up, I should say. If next week we come into the market and we take out this week's high up here at 39.2875, right? If we take that out, then I will say the weekly is firmly up, and then we should go and attack this trend line, and then where we and eat away some of the sell tail from that week, uh, where we had that outside week down. So right now, I'm still calling the weekly balance, and then the same thing I'm saying for the daily. The daily, I'm still calling balance. I'm still gonna say the daily is balance, just because we took it out. I would have liked to see us close above that balance. Just because we took it out, if anything, I'm gonna say that we stretched it. We tested the 50-day moving average. We closed above the 20, but that's not enough proof for me. I want to see us have price higher and find acceptance above that weekly balance high, which is also our daily balance high, right? Our daily balance high was above that high as well, 39.1875. I think we may have just stretched it. Like I said, come in Monday if we take out Friday's high right here and that weekly high at 39.2875. If we take out this high, then you should see the market uh, break above, right? Break above, maybe pull back a little bit and continue higher. That's what you should see come into the market, right? I would have liked to see us close above both the 20-day moving average, the 50-day moving average, and that weekly balance and daily balance high. Find acceptance up there, and I would have been pretty satisfied. Not to take away anything that the Bulls did. The Bulls did a great job at protecting the balance low, and then what they accomplished on the intraday, which I'll go over here in just a second. Now, if next week we come in with a gap above this daily high and the weekly high, and we find acceptance above, there's not a lot keeping us from going up and testing the 200-day moving average, which is right where this gap starts. I have highlighted here. The gap starts there at 39.85.25. So the gap starts right there, and your 200-day moving average is right there, basically the same price. So if we open up above this and push higher, we will go and test that gap down and the 200-day moving average, as well as the top of our trend line that's been trending down since last year. Now, if we open up inside uh, this range, this daily range, I'm not going to say that the daily will be up. I want to see us take it out, find acceptance of higher price, and then rotate higher. So, with that being said, let's break down our intraday, what occurred on the intraday. So just like all the rest of these days, I'm going to label the time frames. Each one of these time frames is a 30-minute candle, right? So I like to label them just to better identify what time frame I'm talking about. That we're not like, oh, the first time frame, the second time for the 30-minute bar, the third 30-minute candle bar, the fourth. All right, so real quick, I'm just going to label these. And on an actual market profile, uh, software like Window Trader or something of that nature, they actually have this whole candle bar as a as the letter A, or this whole candle will be the letter B, etc. So this is A period. I'm gonna go through real quick and just label all of these. But impressive day overall by the Bulls. Um, and then, like I said, in tomorrow's video, I'm gonna break down on how you could have traded this day and what you could have looked for, as well as share a checklist sheet that I think is pretty important that I would not have known about and used myself until like if it weren't for Paul Asmar and his Discord room, as well as his YouTube channels. He posts 2 free videos every day in the morning and in the evening. And oh, I believe you guys can hear the song going on in the background. All right, but he posts 2 videos both in the morning and in the evening after the market close. So before market opens and before giving you a game plan, uh, just to kind of let you guys know what his thought process is going into the day. So if you're interested, go and check out his YouTube channel, and I promise you, you will not regret it. If you're wanting to take it a step extra and get more educated on how to view destinations and find areas in the chart that you should be aware of, whether it's in the SPY, the futures, equities, anything of that nature, you should go check out his channel and maybe pop into the Discord room. It is a deal that you'll never regret. Uh, but with that being said, let's break down today's price action. So we open up with a gap above the high day from Thursday, right? From the 5th, we opened up about with a gap. We had economic data come out Friday morning. Nothing, uh, nothing you should consider an impact on your trading. The market's going to do what the market wants to do. The market makes the news, not news makes the market. That you should be clear about. So we open up an A period with a gap. We filled that gap, came down through. Man, was that a short opportunity because once you got back into the previous day's range, you knew that we were going to come and visit this 10Y point of control that I had marked down here at 38, 31, 25, the 10Y point of control, right? So points of control tend to be visited, especially when they're wide like this, 10 wide. Those points tend to be hit more often than not before we ever, have them disappear. Or if they're naked, excuse me, if they're naked, you'll revisit them at some point in time. They're good destinations to have marked on your chart. Understand where price and volume, where they could be attracted to. So a lot of business happened in this range, and people were happy trading or exchanging inventory at this price. And guess what? Price was absorbed at a lower price and then distributed higher. So what does that mean? After we came down to 10, to this 10 wide point of control, B opened up. We had something pretty significant happen in B period. So when A period closes, B period opens and pushes directly up. We never look back. That's called a lowest accepted price. So right here in B period, we had a lowest accepted price. We push up. We attempt to take out A period's high. Didn't quite get it. C opens up and then boom, we rocket up to the upside, creating a set of single prints or an intraday gap where I'm about to mark right in this range. And you can see that by the volume. You can see kind of how volume here is built up, and then right there where the gap is, there is no volume, not a lot of volume in there. That just means price just continued to push up. We never revisited, so single prints were created there. And then we continued to set new highs on the day until E period. After that, we set that new high in E period. We took out not only one daily high, we took out 2 and 3 daily highs. We had a non-wide point of control up here. We just missed getting. Um, we didn't get it until later in J period. So, like I said, points of controls are tend to be areas of that are attraction for price later on, like a magnet. Kind of expect price to come to that magnet if you have it marked properly. So we got those daily highs, battled it. We're coming near a visual area. We had our 20-day moving average up here as well. So we were battling the 20, these daily highs, and our balance high up here. So after taking that out, took that out, we took out the high day from the third, and we almost got the non-wide point of control. I had mine at 39.05. People also said it was at 39.01. So because of that discrepancy, we're going to say we hit it already in E period. So after we battled and tried to push up here on a trend day up, we had a set of single prints. So what does that mean? It means an area where price just jumped and we never looked back. So every time we pulled back an F, G, and an H, we never broke down into that set of single prints. Buyers were stepping up and then push this thing higher, creating another set of single prints here in I period. And they never came back to it. So we have two sets of single prints, a triple distribution day. So this is one distribution, A's high to A's low. Another distribution would be E's high to I's high, or E's low to I's high is another distribution. So price was absorbed here and then distributed up here at a higher price near the balance high. And then you have the upper distribution. So you got upper distribution, L's high to M's low. The middle distribution, I's high to E's low. The lower distribution, A's high to A period low. So those are going to be some destinations to look for come Monday. Real quick, let's go ahead. I'm going to keep that daily balance high marked. Even though we took it out, I want to have it as a reference point going forward. That way I kind of just have an idea of where that's at. We'll mark this high of day. Single print start right here at 13. Destination. Single print start. And I'm gonna go into more detail in tomorrow's video. It's high. 390450. Getting a little bit more in depth on how you can use these single prints to help your trading and how to use things like point of control that's forming throughout the day, how to identify that point of control, and how it can help you discover nuances to trade. So you got your first set of single prints here from 3913 to 390450, pretty large set. Second set of single prints start here at 3885.50. 3885.50. Single print start. And then they get filled at A's high at 3875. Shoot, what happened? And then you had your lowest accepted price down here. Just throwing this chart all over today. Lowest accepted price at B's low. At 42.50. Accepted price. Pretty significant thing. Reason it's significant is because we never came back to this price. Never. We opened up at that price and pushed up and never looked back. Pretty powerful thing because it created 1 and 2 sets of single prints, a triple distribution. And then we have our low of day down here at 29. Boom. All right, so there's our destination. So if we open up in the upper distribution, which was J's high to M's low, or L's high to M's low, excuse me, 39.28.75 to 39.13. We've opened up inside this range. We don't fill the set of single prints, then you should have price move up higher and go and visit 39.85.25. If we open up above with a gap and we don't look back, we should go visit 39.85.25 and fill the gap at 39.97. Now, if we open up inside the upper distribution on Monday and we fill the set of single prints, then you look to rotate lower and possibly test the low of this middle distribution right here where the single prints start at 38.85.50. If we hold that, could rotate back up. If there's more liquidity, more supply, then you look to fill the set of single prints at 38.75. Last thing bulls don't want to see is get to that lowest accepted price down here at 38.42.50, because after that you don't have anything until the low of day. So you want to hold these set of single prints as a buyer and as a bull. And yeah, so with that being said, ladies and gentlemen, that's how I chart the intraday. Tomorrow I'll have a video out about how to trade against these levels and how to use them in your intraday trading. And I hope you guys enjoy it. I know this is a longer video, but hopefully you gain some knowledge. And if not, I do appreciate you watching my videos and supporting me. If you wouldn't mind, leave a like. And if you're new, please subscribe. We'll catch you in the next one. See ya.